Hello, this is Dave, and welcome to Equity Story. And in this little video, I'm going to look at one little punty hot stock, which I think is getting hotter and hotter, which could be a big winner in a really tough market. But before I do that, before I get into any trouble, this is just a general share advice, not personal advice. Please read the disclaimer. But before I have a look at that story, let's have a look at the general markets because Mr. Powell, the big boss in the Fed, he's really, when you look at his speech, he surprised the market. The market is now expecting lower interest rates than they were, higher interest rates by the end of this year than they were really expecting. But also, they're now expecting interest rates to be higher for longer. Now, let's have a look at the Dow. So, and you saw it was quite interesting when Powell, when they announced that it was only going to be a 75 base point increase, not a whole 1 point base increase. Um, the market rallied in the short term. It had a little bit of a rally, and everything looked a little bit. Everyone's thinking, oh, maybe it's okay. But that rally didn't last long at all because the more you look into what Powell said, the more he seemed determined, certainly in the short term, that he's going to really fight this inflation as hard as he can. So interest rates are going to be higher this year by the end of the year. Next year they're going to be higher. They're going to be higher for longer. Markets don't like that, and bang, down she goes. So the question is, how low does she go? And you've got some really big points here. You've got some big support here. If we break 30,000 on the Dow, guess what? The computers all click in then, don't they? And the computers will start selling different levels, and yeah, I think we can have a much bigger drop down to that 28,000, where we're only there in 2020. I mean, that's a ridiculous thing. We've had this massive COVID bump up. The way the world looks, and this is why it's so scary, doesn't it? You think we easily get back to down to 28,000, but really, the way it all looks at the moment with inflation and issues, the world recession, we really should be a lot lower, 22 or even 20,000. But and you can see again the Nasdaq looking the same, back down to those lows, and the S&P 500 doing a little bit better, but I think some big support levels there now. Like I said, I think if it breaks that tonight, early next week, or by the end of next week, we're going to go a lot lower sooner. We might just have a little bit of support here for a few weeks, and then go lower. But we'll see. The price action will tell us which way to go. Our market is following suit as we'd expect, and we haven't quite hit our recent lows, but we're not far off it. We're just about 100 pips away, and again, I think we'll do the same. I think we'll break that level, and I think potentially go a lot lower, and maybe even back down to that sort of 6,000 level in the near term. So general market's going to be very, very tough, but there are little areas, and I'm just going to look at maybe two or three of those where I think they could do quite well. And the main area is energy. And AJ Lucas is a hot stock 2 weeks ago. I think it's hotter now because they've got some of the biggest land holdings in the UK for fracking rights, and reportedly, their assets are worth in the billions and billions of dollars. I've heard and it's hard to value these. How do you value these assets under the ground? But some people have said they're north of $100 billion dollars worth of assets. Some people said less. But I'll tell you what, at the moment, AJ Lucas is trading about 200 million market cap, 250 million market cap. I think it's worth a lot more. These assets are, um, and and possibly also you think really this sort of market cap be a huge takeover target. But the UK very bullish overnight. They're going to they want to get fracking as fast as possible. Massive energy problems, and I think if you take that medium term view, I wouldn't go long with something like AJ Lucas because you just don't know. So the fracking groups are pretty strong, and possibly if a Labour government came in the UK, they could ban fracking. They don't like it. They're a little bit more maybe sort of anti that type of industry. But um, if I'm in that, I'm holding it. If not, I'm still buying it. Again, there's risk there. It's a risky stock. It's high risk, but this is a potential play that could 10 bag, right? So, and when I say 10 bag, it could go, 5, 4, 5 times. The assets are just worth so much more than where they're trading. And again, energy. I got an email today saying, Dave, thank you. You've killed it last year. You picked this market pretty good, week in, week out, and but again, if you look at the oil price, I think the oil's going to stay reasonably strong, even though we get into a world recession. I think the demand for oil is still going to hold up there. The reason being, overnight, the war in Ukraine is just getting worse and worse and worse. I can't see these embargoes against Russia being lifted, and if you look at Putin, he's nervous now. He's really scared. He's got 300. He's called out 300,000 reservists. I mean, the Russians apparently queuing the border, trying to get out into Georgia. This war is getting bigger, not getting smaller. It's getting bigger, and getting more scary day by day. So again, you think it's going to be fairly well supported for the oil price, and plus the fact, like we said, Biden is started to use all the U.S. strategic oil reserves. They've got 484 billion left, and they're going for 1 billion barrels a day. Well, if he keeps doing that, who knows what the price of oil could be in a year. So, Woodside at 5.5%, I think I'm in there, and I'll be holding this dividend. I'll be happy with my 5.5%, and I'll be, hopefully, if I took that long-term view, I'd be getting a bit of growth out of the story as well. Now, we've seen red across the board today. But I'm just going to pick on a few stocks where there's a little bit of light. And you can see BHP and Fortescue holding up really well. The reason being is that the Chinese government have announced a 1.8 trillion yen dollar infrastructure spend. So it's something they've often done in the past. When as soon as the economy starts to slow down, which we talked about the other day with the GDP numbers at 0.4%, they're nervous. Why? Look at the unemployment they've got amongst the youth, 20%. This is sort of unemployment numbers that governments can change. Now, the old Red Army doesn't want that to happen, so they're going to spend as much money as they can to keep everybody at work. And who's that good for? It's good for FMG, it's good for BHP, it's good for Rio. And I think if you're in FMG for that 17% dividend, I'm not saying it's going to stay at 17%. It could, but I think that dividend is largely going to hold up reasonably well, especially over the next 6 months. So if you're in these iron ore plays and you're in there for a dividend, I'd be holding them. There were a bit of news that LYL, again, they had a strong contract win. I think around 26 million. But you know what? This section is doing well. These picks and shovels, looking after our resources industry, these sort of companies are doing very well, and they've got a lot of work on at the moment. And again, good chart. It's been on Einstein's for a few weeks. It's trending beautifully, and if you're in that, I'd be holding it. Again, another decent contract win, and again, little MTO. This was actually looking really weak. It actually got a sell signal, and they've come in just in time, I think, for a really good acquisition. They bought Mojo for 60 million, roughly around a 4.1 times F22 NBPT, which they're not overpaying for the company at all, and I think it's going to give them potential a lot of channels open in Australia to sell their mopeds and sell their motorbikes. I don't really follow the company, and I don't think Wolfie does either. But as long as they can keep that dividend, they're not trading on a high multiple. I think it's around 9 times, and they're giving. I give you exactly what they're doing actually. And this dividend, it could change a little bit because of the offer, but they're giving a dividend were about 8% and trading about 6-7 times. So there's sort of a lot to like about the business, and so would I buy it? No, not really. I think it's got to do a little bit more on the charts for me to buy it. But I think if you were in it and I know we did put this one on back here as a dividend play and we actually got out of it. But I think if you didn't listen to us and you're still in it, maybe a news like that you'd be holding it. And I suppose the other place that most probably going to do well, isn't it? Is these little bear and this little BBUS, these little exchange traded funds. When the world crashes, they actually go up. So they short the market. So again, they're looking actually quite good. The bear and the BBUS, and I think possibly we're going to see these ETFs make people a bit of money over the next 6 months. On that note, that's all I've got to talk about. What I do say, I've got the great Claude Walker with me at 12 o'clock, and we're going to be going live. So if you've got any questions, we can ask them, and hopefully we can give you some good guidance what to do. On that note, thank you very much, and thanks for listening to Equity Story. Bye bye.